Welcome back to Market Farafat, where we are taking you through all the stocks that are in focus today on the back of news flow or on the back of technicals. So let me get on board now. Nilesh Jain, who's the head derivatives and technical research center broking, who's joining us. But we will get Ansh first, and then we'll have Nilesh on board as well. But Ansh, coming to you first, Bharti Hexacom is what you picked out for us. It's an earnings candidate. Tell us what does the earning for Bharti look like?
Right, so Bharti Hexacom had come up with their earnings, and revenue had actually gone up by just slightly 1.7% to 2,289 crore. But if you talk about profit, then that has given a very good jump of around 79% from 261 crore directly to 468 crore. And overall customer base currently stands at around 28.6 million. Whereas if you talk about EBITDA, then here also we are seeing very good improvement. It has jumped by around 33% on year-on-year basis to 1,220 crore. Talking about margin, here also we are seeing very nice expansion happening of more than 430 points to 53.3%. Now, if you talk about net income, then that stands at around 380 crore as compared to previous year's quarter of 223 crore. Also, if you talk about capex, then that stands at around 425 crore. And now, if we see on chart, then stock has actually touched all-time high level, but due to market pressure, it is trading in red currently.
The take on Bharti Hexacom and the news flow behind it. Let's move on and talk about OMCs. The entire pack is in focus today, like some HPCL, BPCL, IOC. It's on the back of a positive note coming in from JP Morgan, wherein they've gone ahead and upgraded the OMCs and raised the target prices as well. If you take a look at HPCL, JP Morgan has upgraded HPCL to an overweight rating. Target price has also been hiked to 463 rupees. For BPCL as well, they've maintained overweight rating and target price has been raised to 481 rupees per share. When it comes to IOC, overweight once again, and target price has been hiked to 199 rupees per share. Now that we've seen a cut coming in terms of crude oil, they're saying that how good is a $60 per barrel oil mark for the OMCs. They say if things stay as they are, they believe that the first half EBITDA run rates for IOCL, BPCL as well as HPCL can exceed FY26 consensus forecast of 50 to 80%. So the whole year forecast can be achieved in the first half itself if the crude prices stay where they are, is what JP Morgan is saying. On the back of that, very good moves coming in from HPCL up 2%, BPCL is also up 1%, and IOC also doing pretty okay for itself in today's trade. Good move coming in from OMCs as we speak.
OMC is moving there up in trade. But coming to you, Ravinder, you picked out Siemens for us, another candidate that has posted good set of numbers. Tell us, what does the number look like?
Well, Siemens has announced its quarterly number, and the company's number was not so great on a year-on-year basis. But if you look at the performance of the company on a sequential basis, growth has been good except margin. And according to the company, it had a flat revenue annually due to normalization of demand in digital industry and regular project delivery in the mobility business. And Siemens recorded a 20% increase in revenue on a quarter-on-quarter basis, and profit was also rose by 20% on a sequential basis, while EBITDA increased by 8.5%. However, EBITDA margin decreased slightly 20% from 22.8% on a sequential basis. So back of the quarterly results, stock is up approx 3%.
The take on that stock, but let's move on and let's now welcome Nilesh Jain on board, head derivatives and technical research at Centrum Broking. Nilesh, hi, welcome so much. You've picked out First Source for us as your first stock. Tell us what are the levels that you're spotting and why is this stock interesting on the charts?
Hi, very good afternoon to you. See, first of all, FSL, if you look at overall mid-cap and small-cap IT space, where we have seen a good rebound in last 3-4 consecutive sessions, and talking about First Source, this particular counter has also given a good breakout from its falling trend line, and on derivative, in fact on technical front, it is trading well above all long-term and short-term moving averages as well. And looking at the recent momentum in last 4 consecutive sessions, looks like the stock is heading towards 385 to 400 kind of levels on the upside. So it's a good buy at current level, and on declines, keeping a stop loss below 358, and on the upside, we can expect short to medium term target could be around 400.
All right, moving on then, coming to you, Aunt Cipla. Tell us what is the news flow on Cipla? Brokerage note that has come out in Cipla. Tell us what is the note saying?
Come up with their earnings yesterday, and today we have brokerage reports, and BNK has maintained a hold rating and they have kept the target price same of 1,590 rupees. Currently, Cipla is trading at around 1,500, so more 90 to 100 rupees on upside is what they are expecting. They have reported a steady quarter 4 number as well as FY25 numbers, and during the year all key geographies such as India, North America, Africa and EU reported healthy growth of working capital, and debt had actually reduced significantly, which is very positive for the company. But they have trimmed the EPS for FY26 by 4%. We also have report from Nuama, and they have retained hold rating with an target price of around 1620, and they have said that India, EU, Africa along has the expected lines leading to inland revenue, whereas if we talk about margin guidance, then that was below their expectation, which is a bit of a cautious signal here, and even they have trimmed their FY26 EPS by around 2%.
All right, moving on then to the next counter, that's Max Financial, that is in focus today. In fact, it has reported some strong set of results coming in. Steady performance for the March quarter supported by strong execution at the life insurance arm, Axis Max Life. For quarter 4, the total annualized premium equivalent rose 6% on a year-on-year basis to 3,039 crores, which was largely in line with what the market was penciling in. The value of the new business, VNB, came in at 882 crores. That's up 8% from 820 crores on a year-on-year basis, and sharply ahead of what the market was really expecting. The VNB margin improved by 45 basis points to 29%, beating the estimates of 26%, driven by a favorable product mix and higher proprietary channel share. For the full year FY25, Axis Max Life delivered robust growth across metrics. Proprietary channels APE rose 26%, while the overall APE was up 18%, aided by a 13% in the bank assurance channels. And on the back of that, Max Financial is up in a way more than 3.5% in trade.
Okay, good move coming in on Max Financial as well. Let's move on. Nilesh, coming to you. NMDC is the stock that you've picked out for us. Last 1 year, the stock has seen a 20% cut coming in. But ever since then, we've seen a slow and steady recovery coming in for the stock. Tell us, where do you believe the stock is now headed?
See, no doubt the stock has been one of the underperformers. We have seen a constant formation of a lower top and lower bottom, but now looks like the stock is bottoming out. We have seen multiple bottom near about 60 to 62 zone, and recently the stock has picked up the momentum and also reclaimed its 200-day long-term exponential moving average as well. So on the back of that, we are expecting a sort of a short-term momentum to continue in this particular counter towards the levels of 74 to 76. So this momentum can be played with a stop loss below 66.5, and short-term target would be around 72 to 75.
Okay, so that's the levels to watch out for on NMDC. Let's talk about Zydus Life. Positive news flow coming in for the company, but the stock was absolutely flat. It's picked up some steam since then. Okay, a 6% uptick coming in on the stock, so good jump coming in. The pharma company has received the EIR report from the US FDA for the inspection conducted at its API manufacturing facility located at Ambernath in Maharashtra. This facility underwent an inspection from the 10th to the 14th of February and ended with 0 observations. The EIR report has classified it as no action indicated. Very positive news flow coming in for Zydus Life. Stock also reflecting that in the sharp spike that we've seen recently, or just a few minutes ago, 0.6% higher is where that stock is.
All right, moving on to the next counter. CG Power is what you picked out for us, Nilesh. That is up in a way 2.5% in trade today. In fact, in the last 1 month, it has shown some strong momentum of 13%. Tell us, do you see this momentum to continue?
Power today, if you see, the stock has given a good breakout from its 5 months of consolidation zone. And also, if you see the derivative data, today we have seen close to 2% fresh OI addition. So looking at that, a long build-up is happening in this particular counter, and technical breakouts can also be seen with a good volume participation as well. So on the back of that, we are expecting a short-term momentum in this particular stock towards the levels of 700 to 725 on the upside. With a stop loss below 645, a decline can be bought in CG Power, and also at present level, one can go long in this particular counter for 700 to 725 target.
Okay, those are the levels to watch out for on CG Power, but let's hold on the stocks right now because it's time for an ET Now exclusive. We understand from sources that on account of rising complaints on health insurers, companies have been asked to pump more funds into the Ombudsman Fund. Let's go across to Anurag Shah for all of those details. Anurag.
Health insurers, Shahi companies will get more burden for the funds for insurance ombudsman system. As per our sources, till now the contribution for insurance ombudsman system was 50-50. 50% contribution used to be done by life insurance industry and 50% by general insurance industry. But with the rising number of complaints in a health insurance space, now CIO, that is a Council of Insurance Ombudsman, has decided to change the ratio of funding. So now life insurance industries, life insurance council will be contributing 31% and remaining 69% of the fund will be contributed by general insurance companies, and a major rise in fund will be for the health insurance companies, SAHI companies, standalone health insurance companies. So we have seen the data of FY24. So across the 17 ombudsmen across the country where the complaint received in a health insurance space, the complaints are around 31,000. In a life insurance space, the complaints are around 16,000. In a general insurance space, around 5,000. So in a health insurance, number of complaints are increasing. That is the reason that CIO has decided to change the formula of contribution, and this will burden the insurance companies, health insurance companies. Across the country, there are 17 insurance ombudsmen, and insurance ombudsmen are completely funded by the insurance industry, general insurance industry and life insurance industry. In FY24, the total funding was of around 73 crore, which was contributed by the industry only. And going ahead, this funding will increase, and overall share of health insurers will also increase due to increase in rising number of complaints related to health insurance space.
All right, Anurag, thank you so much for joining us with the details of that. But moving on, coming to you, Ravinder, Adani Green is what you've picked out for us. Tell us, what's the news flow here?
Adani Green is in focus, where Adani Renewable Energy 56 Limited, which is a subsidiary company of the Adani Green, has operationalized incremental solar power project of 50 megawatt at Khandwa, Gujarat. And with this operation of the plant, Adani's Green Energy Limited total operational renewable generation capacity has increased to 14,340.9 megawatt. So back of this news, stock is up 0.5%.
Positive news coming in for Adani Green, stock up 0.5%. Nilesh, coming to you, EID Perry is a stock that you've picked out for us, a stock that we don't usually talk about on this show. So surprising to see this name here. Last 6 months, the stock is up 18%. But here to date, the stock has not done all that much. Last 1 year, the stock was up 50%. Do you believe that it was a very big move? The base is quite high for the stock to now follow, and we're in room for some consolidation? Or do you believe that the momentum that we've seen over the last year could be replicated this year as well for EID Perry?
Right, so if you see on the monthly time frame chart, this is the third consecutive months of gain in this particular stock, where the stock is up close to 13% in this month, and in fact 10% jump can be seen in this week itself. So good momentum has been picked up in this particular counter. Recently, the stock has given a kind of inverse HNS pattern breakout on the daily time frame chart. So given this kind of technical setup where the stock is also trading well above its all long-term and short-term moving averages as well. So we are expecting a new record high in this particular stock towards 980 or maybe 1000 kind of levels can be seen from short to medium term perspective. So can be accumulated at present level and on declines as well, with a stop loss below 875. 875 is the neckline support zone for this particular counter. So till the time it doesn't break below the same, the outlook continues to remain on a positive side for near term target of 1000 plus.
All right, that's EID Perry on the charts. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with the other stocks that are buzzing in trade on the other side. Stay tuned.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus today. Ansh, coming to you, Eicher Motors is the stock that you've picked out for us. Tell us why that is.
Well, yes, sir. So we are expecting earnings here, and we have preview report, and as per that, we are seeing that revenue is expected to go up by around 22% on year-on-year basis, from 4,256 crore to 5,190 crore. Whereas if we talk about EBITDA, that also is expected to go up by around 15% to 1,295 crore. But margin is expected to come down from 26.5% to 25%. But if we talk about profit, then that is also expected to go a good jump of around 18% to 1,265 crore. Now, overall, Royal Enfield volume will be increasing, should increase by around 24% on year-on-year basis, and this would be mainly supported by a 42% year-on-year rise in exports and a 22% year-on-year growth in domestic sales. Also, on quarter-on-quarter basis, ASP is likely to be marginally up as the benefits from a better export mix and price mix are likely to be offset by an adverse domestic mix here. So, for those reasons, the stock is in focus today.
Right, moving on from Eicher Motors to the next counter. Snehi, you picked out Aurobindo Pharma for us. Tell us, what is the news flow here?
It's a positive news flow coming in, but let's see if the stock reflects that or not. The stock continues to be under pressure, almost a % cut coming in. Maybe there's some profit booking on the stock, but because the news flow is positive, because Aurobindo Pharma subsidiary Curatech Biologics has received marketing authorization for Zephyl T, its filgrastim biosimilar version from Medicines and Healthcare Product Regulatory Agency, which is the MHRA of the UK. Now, Zephyl T is a medicine that stimulates the production of white blood cells in the body. Remember, all the way back in Feb, Zephyl T had received the marketing authorization in the European Union from the European Commission. This is Curatech's second biosimilar to be approved by the MHRA, and Bevcolva was the first one in December 2024. This is what Aurobindo Pharma said in a filing on Tuesday. So it's a highly positive news flow coming in for Aurobindo Pharma, but the stock, along with the market sentiment, is tanking away in today's trade.
Aurobindo Pharma tanking away in trade there. But coming to you, Nilesh, you picked out Ashok Leyland for us. This stock has been doing pretty decent in the last 1 month, 9% gains coming in. Tell us from here on, where do you see the stock headed?
Within Auto Pack, Ashok Leyland is looking pretty attractive because of the multiple reasons. So first of all, the stock has given a good consolidation breakout on the daily time frame chart, as well as it is trading well above its all long-term and short-term moving averages. If you see today, the stock has given a breakout from its short-term time frame chart, where the immediate resistance of 225 has been taken off. So momentum can be seen in this particular stock towards 245 to 250, and stop loss for the long position can be placed somewhere around 228. So Ashok Leyland is a buy at present level for upside target of 245 to 250.
Okay, so those are the levels to watch out for. Let's move on. Ravinder, Asian Paints is a stock that you've picked out for us. I believe it's based on the Economic Times report that we saw earlier this morning. Take us through that.
Is in focus, where as per ET sources, Reliance Industry, which hold a 4.9% stake in the Asian Paint, is considering to selling its stake. A 17-year-old investment amid increasing competition and margin pressure in the Indian paints market. The sale managed by the Bank of America could fetch a rupees 11,141 crore, representing a significant return on Reliance initial investment. However, the deal hinges on securing bids with the desired price range. Remember that recently company has announced its Q4 number, and the Q4 number was also muted of Asian Paint, which also led to a decline in the stock price. So back of this news of Reliance selling its stake in Asian Paint, stock is down 2%.
Alright, moving on from Asian Paints, that's declining in trade with cuts of 1.8%. Bharti Airtel is the next counter, an earnings candidate. Tell us, Ansh, what does the result look like for Bharti Airtel?
Well, yes, Bharti Airtel has reported a steady performance for fourth quarter of FY25. Revenue came in at 47,876 crore, registering 6.1% sequential growth, which is in line with our estimates. Whereas if we talk about profitability front, then net profit stood at 11,022 crore, which is down by around 25.4% on quarter-on-quarter basis. Now, despite it is down, but it is still ahead of street expectations. If we talk about EBITDA, then that rose by nearly 10% on quarter-on-quarter basis to 27,009 crore, whereas margin improved by around 191 basis point to 56.4%, broadly in line with our expectations. Company's ARPU remained flat at around 245 rupees, indicating a stable revenue per user metric. Whereas if we talk about capex, then during the quarter it surged to around 14,401 crore as compared to previous quarter of just 9,161 crore. The company actually continues to invest in network expansion and 5G rollout, due to which we are seeing good capex happening this quarter.
Alright, moving on then to the next counter, which is Britannia. Now, Britannia, remember, was in focus yesterday also because Nuvama had come out with a note and, they were maintaining, they had indicated cost efficiency measures that are in place, but they had said, that they were maintaining a rather they had revised the target price to 6,770 rupees against the earlier 6,500. So they had revised the target price there. Now there's another note coming in on Britannia today, which is by Goldman Sachs, and they are maintaining a neutral rating on Goldman Sachs on Britannia, but they are also raising the target price on it from to 5,650 rupees. So a target raise is coming in on Britannia, an upgrade coming in, but nonetheless it has declined from the day's highest point. Right now it is trading at the day's lowest point with cuts of 0.7%.
Okay, so Britannia slightly lower in today's trading session. Remember, very good set of quarter four numbers came in from Britannia, a beat across all fronts. But on that note, we'll wrap it up on this edition of Market Fatafat in terms of the stocks that we want to cover. Nilesh, Ravinder as well as Ansh, thanks so much for joining us. But while we are talking about stocks, let's shift focus to the MSCI index rejig for the month of May. Let's go across to Shrishti to understand what the rejig is, because remember, this takes place, this comes into effect on the 30th of this month. So let's go across to Shrishti to understand what these adjustments have been. Shrishti.
Well, yes, MSCI May 2025 rejig has been announced, and this time around two counters are going to be in focus, Coromandel International as well as Nykaa. These counters will make it way to MSCI Global Standard Index. They will be a part of MSCI May 2025 semi-annual review, and the changes will take effect after the market close on May 30th. That's what we are gathering, and in these two counters, they are also expected to see some of the passive inflows as well. As per IIFL Alternative Desk, they are highlighting that Coromandel International inclusion could bring passive inflows of $227 million, and when it comes to Nykaa, that can actually also see an inflow of $181 million as well. So that's about MSCI Global Standard Index, but in the India Domestic Index as well, these two will get included. When it comes to the small cap index, a total of 11 additions that have been announced. So that's about the MSCI rejig that has been announced for the month of May. Back to you.
All right, moving on then, India's Commerce Minister Piyush Goyal will begin a visit to US this weekend to take part in the trade talks. Now, sources say that the next round of India-US trade talks will focus on ironing out market accesses. The rules of origin and non-tariff barriers, Piyush Goyal's delegation will include senior officials as well. Sumit Chaturvedi is joining in with the details of this visit. Let's take a look.
Well, as India and US discuss to seal a bilateral trade deal by the fall of this year, Piyush Goyal, Commerce Minister of India, will visit US on the weekend. From 17th May, he will start his visit, which will go on till 20th of this month. Well, he's going to meet their USTR representative and also possibly Secretary of Commerce of United States. Well, US Vice President Vance was on India visit last month. There he met a number of officials and a number of talks also took place. India and US, they are looking forward to sealing this deal bilateral trade agreement this year only. If we talk about US and India, well, India is seeking concessions in many items like textiles, leather goods and other such electronic items. But on the other hand, US is seeking duty easiness in automobiles, electric vehicles, wines, cheese and some agricultural products. India, in fact, has gone to WTO and has also threatened that India has retaliatory tariffs also in its fold if it has to do that, but that will be on aluminium and steel. So, keeping into account the 90-day tariff pause which is happening between India and US, taking place in India and US, this visit is quite important, especially when retaliatory tariffs have been announced by America on April 2nd this year.
Okay, well, on that note, we'll wrap it up on this edition of Market Fatafat. Sumit, thanks so much for all of those details. But it's a goodbye from Ankita, me and the team that put this show together. Stay tuned to ET Now because Closing Trades is up next.
If you like this video, then like, share and subscribe to ET Now.